It's so easy to confiscate your wealth, your work. Because what do? We work for money, right? And then we try to save it and accumulate it for later, any wealth, any money that we don't need today for down the road. But the whole system, the whole current fiat system is based upon constantly compounding inflation. And as long as there's some purchasing power in there to take, well, they can do that invisibly. That's the inflation tax. They can tax you without going to legislation. But for corporations, that's what this wealth and income inequality is all about, because the current system enabled that. But we're at the end of the life cycle. There's officially, and this is true globally, virtually no purchasing power left. We're all experiencing more rapid inflation, which is, part of the deal, but have they lost control of that? Because even the central bankers have admitted, Christine Lagarde, that they don't understand inflation, which is why they used it in the system, because they knew people don't understand it. They get married to the numbers rather than the utility. And even wages, right? I mean, the average wage back in 1971 was something like $9,500, and a family of four could live with one wage earner. Today, it's like $57,000. It takes two wage earners. You're still paycheck to paycheck. There are a lot of people that are earning up to $250,000 a year that are paycheck to paycheck.
Lynette Zang, a renowned financial analyst and commentator, offers a thought-provoking analysis on the current state of global finance and the imminent shifts in economic power dynamics. In her insightful discourse, Zang delves into the intricacies of the financial system, highlighting key indicators and historical trends that signal a profound transition in the world economy. With a keen eye for detail and a wealth of expertise, she navigates through complex topics such as currency valuation, central bank policies, and the role of gold in shaping financial sovereignty. As she articulates her perspectives, Zang unveils a narrative that challenges conventional wisdom, urging listeners to contemplate the implications of a changing financial landscape. Join us as we delve into Lynette Zang's illuminating insights on the present and future of global finance.
So that nominal confusion, and they knew that. That's why they created the system based on that nominal confusion. The reason why we see a division, right, between the West and the East, China, Russia, India, those countries central banks globally are accumulating more gold than they ever have before, even more than 1967 when we were in the middle of this transition. But whoever holds the gold retains the power, retains the choice. And so what we're actually experiencing is a shift in financial power on a global basis from the West, from the US, to the East, to China. And the other piece that's really critical to understand is the huge advantage that the US has had since the 40s as the world reserve currency. But no currency retains that forever. And we are rapidly, very rapidly losing that status. But that didn't just start, that started in 2000. 2000 was the first time historically that our central bank had to start buying back our government debt. But they didn't broadcast it. It wasn't because it's not a good thing. It only became a good thing in 2009 with quantitative easing and all that stuff. So what I see for us here in the U.S. and actually everywhere is I think we'll go into a hyperinflationary depression.
According to Lynette Zang, there's a prevailing sentiment that if authorities are to introduce new currency backed by debt, they must first eliminate existing debt. She notes that mainstream financial commentators on outlets like Bloomberg and CNBC often discuss economic growth alongside discussions about increasing debt burdens. Zang expresses skepticism about the sustainability of this approach, asserting that governments, corporations, and individuals are already stretched to their limits in terms of debt capacity. Zang suggests that a transition away from the US dollar is not only feasible but also accelerating. Drawing on historical precedent, she cautions that predicting timing amidst such complex dynamics is challenging. Nevertheless, she asserts that current circumstances indicate a critical juncture. Zhang suggests that the financial system effectively collapsed in 2008 and has since been propped up artificially. She likens this support to money PR, emphasizing that it relies heavily on bolstering balance sheets with questionable assets and buying back government securities, highlighting a lack of liquidity in the treasury market since 2015. Zhang underscores its pivotal role in the global financial system. She points out a shift in management responsibility from the Federal Reserve to traders in 2013, suggesting potential implications for market stability. Zhang observes traders making speculative bets on the treasury market's default, signaling underlying concerns. Zhang ponders the divided nature of the government and questions whether its actions are deliberate or unintentional. Drawing an analogy to personal finance, she suggests that when faced with imminent bankruptcy, individuals tend to maximize credit utilization. This skepticism underscores her belief that the financial system is precariously close to collapse.
I mean, I think we are precariously close, and what we're experiencing between the issues that are happening around the banking system and inflation and the treasury markets and the transition to a completely new interest rate benchmark, which is, if you're going to have interest, that's debt, right? To be perfectly honest with you in this, what I am seriously seeing is that whoever holds the gold, and this is why the central bankers are accumulating it so much, are the ones that are going to have the choice and at the forefront of this new world order, which everybody is now talking about. But I've been talking about a reset socially, financially, and economically since 2009. And I think it was 2015, but don't hold me to it. And it's one of my favorite reports that they've ever done, which is called Breaking Below the Lower Zero Bound. So how they can take the whole world negative, right? Negative rates, they want us to think that negative rates are a choice, but why in the world would you bust your butt to earn this money and loan it to somebody other than your children, knowing you're not going to get back what you're loaning, right? That is completely illogical. But they can force it. So they can force you to spend, they can dictate where you're going to spend it. And Ford recently came out and got the patent, and the IMF have talked about this, got a patent on the self-driving cars. So if you do not, all these smart houses, the smart cars, and all of this smart stuff, well, that has the smart contracts on there. And if you miss a payment, then they can lock you out of the car and drive the car away. They can lock you out of your house, and what are you going to do? So, yeah, you have to do things that can ensure that you are as independent and self-sufficient as possible.
Lynette Zang expresses a sense of urgency, suggesting that the current state of affairs has brought us dangerously close to a critical tipping point. She observes a confluence of issues spanning the banking system, inflation, treasury markets, and the transition to a new interest rate benchmark. In her assessment, the adoption of negative interest rates represents a significant departure from traditional financial norms, posing profound implications for global economics. Zhang contends that amidst this upheaval, the accumulation of gold by central bankers emerges as a strategic imperative. She posits that gold ownership confers a decisive advantage, granting holders the autonomy to shape economic choices. Proposing a broader paradigm shift, Zhang discusses the concept of a new world order, a notion she has been vocal about since 2009. Referencing a report titled Breaking Below the Lower Zero Bound, Zhang delves into the mechanics of negative interest rates, questioning their rationality. She challenges the logic of lending money with the foreknowledge of not recouping the full amount, branding it as inherently illogical. Drawing attention to recent developments in technology, Zhang highlights the advent of smart contracts in consumer products like self-driving cars and smart homes. She warns of the potential ramifications, emphasizing the loss of autonomy if one fails to meet financial obligations. Zhang advocates for individual empowerment, urging listeners to prioritize self-sufficiency and independence in navigating these turbulent times.